may be wondering, how is liquidity formed? Well, every time liquidity is formed, we either have a move up, then down, or we have a move down, then up. A liquidity sweep is the first confluence that I need or you will need before you look for a trade with my strategy. Let's go ahead and get started with this video. That way you guys can learn what liquidity is more in depth, why I use it, and why it's my #1 step in my strategy. So what is liquidity? Liquidity is I'd say a pool or an area where there is a lot of money resting or a lot of money that is going to be entered into the markets. And why is that? Because once the market reaches these areas, there's a lot of people that are taking out their positions. There's a lot of people that are buying positions. There's a lot of people that are getting stopped out, and so on and so forth. So why do we want to target these areas? Because that's where banks and institutions filled their $100,000 to $1 million orders. And why do they need to target these areas? Because people are buying, people are selling, people are getting stopped out. There's a whole lot of money that is spinning and going around, so they want to be able to put their money there where they're able to, because they can't just buy it wherever they want, because they know that if they do that, their money can go the wrong way, or there is not enough orders being sold or taking out for them to be able to put $1 million in there. Not 1,000, because $1,000 is what we spend, and we don't even make a doji candle. All right, so these people are putting millions and trillions of dollars in these markets, so they're called the market movers. And why do we want to trade like the market movers, or why do we want to trade with liquidity? Because it's just like fish in a sea. The fish, they don't tend to swim away from the wave or a current because they know it's too strong for them to do so. So they swim with it. When it's over, they can swim against it, correct? So just like us in a trade, whenever we sweep liquidity, we want to be thinking just like them. So we sweep it, we're going the other way. All right, so they swept liquidity. Now we have to ride that wave down instead of going against them. Because if we go against them, we're going to get stopped out. But if we move in the wave and we think just like them, then we're going to catch the top of the trade and enter at the end of the trade. And if we sweep another liquidity, then we can end up going the other way. Just like a fish, the wave is done, we can go the other way to where we were thinking of going, or wherever the fish wants to go once the wave is over. So now that we know what liquidity is, why we want it, I want to go ahead and show it to you guys in the market and how powerful it is, because these liquidity sweeps happen in every single minute, from the monthly to the 1 minute time frame, which is the great thing about my strategy, because it's not like, okay, we swept this roof, okay, we bounced off this floor, now I want to buy. It makes sense on why I want to buy and why I want to sell, because that's where the market makers are putting their money. So I want to not think like a retail trader, but I want to think like somebody who works at a hedge fund, somebody who works at a big bank or a big institution. Those people that are putting millions of dollars in these markets and having no nerves, no anxiety, because they know what they're doing. That's what I want to think like, right? So why would I want to go against the wave if I already know what the wave is going to do? I just need to find these confluences in every single confirmation. That way I can ride the wave. Because yes, we can sweep a liquidity, but that's step #1. That's why I have a break of structure. That's why I have a fair value gap with a retracement and then a retracement back into that. Because that gives me the confirmation that we swept liquidity, we broke structure, which means we're going the other way. You guys might not know what a break of structure is, but that's what we're going to be learning tomorrow. So just stick with me, all right? So why do we need it? We're going with the wave, and we want to ride the wave. That way we can catch the top of the move and get it all the way to the down. All right, so let me go ahead and show you these things in the market. That way you guys can get a little bit of more understanding of what these things are, how powerful they are, and why I want to use them every single day. So remember what I told you guys, a liquidity move is an area where the market gets to it and it goes the other way. All right, so like right here we have this high. What happens? We swept it and then we started going down. You see, we swept it, we started going down. Okay, that's example number one. Example number two, we have it right here. We have this high, we're just doing these little jumps, and now we sweep it, we're going down. We sweep it, we're going down. Sweep it, and we're going down. You know, that's how powerful liquidity is. You know, all the way from down here, it's not why it reacted all the way over here. It reacted off of this high, and it reacted off of this high, either one of those. But that's just how powerful liquidity is, okay? As a bank, you want to target this high because there's a lot of money. People think we're still going down. They get stopped out here. They put orders in. People still think we're going higher, and they get stopped out all the way over here because the market makers made the market go down, correct? So that's liquidity example number one. Let's go down to 3-hour time frame. Okay, let's go back to July, so I can show you guys that these things happen every single day, month, year. You know, it's in the market, so why not use it? Why not think like the smart traders, right? Okay, let's go ahead and find another example right here. We have this low. What happens? We sweep it, start going up. Okay, that's example number one. Let's go find 3 more examples. Okay, let's go find 2 for the buy side and 2 for the sell side. Okay, that was example number 1 for buy side. Let's go ahead and find another example. Okay, we have this low right here. We're going up. We never sweep it, so we're not going in another change of direction yet. So we sweep it, and what do? We have that big push up. Okay, let's go ahead and find 2 on the sell side pattern now. Okay, don't worry about that. That was something on my computer. So now what are we looking for? We're looking for highs to get swept so we can go down. And what do we have over here? We have this high over here that once we swept it, we started going down. Okay, that's example number 1. We have another high over here that once we swept it, what did we do? I mean, it's pretty much self-explanatory. You know, I can go into every single time frame and I can find these things for you guys. But just like when I started looking at these things, yeah, I looked at my mentor. I saw how easy he found these examples. But whenever I had to go and do it on my computer, it was hard. Why was it? Because I don't have the experience and I didn't have the time in my belt of using these things, you know. So I could come in these time frames. I can go for an hour, I can go for 2 hours and find these examples for you guys. But the thing is, it's just like when you guys are at school. Your teacher shows you what 2 + 2 is, but how do you remember it? They gave you homework, you did your homework, the day of the test, you remembered what 2 + 2 was. Why? Because you did your homework and you went home and you pretty much studied what it was. So if I'm making these videos for you guys, I don't expect you guys just to watch them and be done with them. You know, I expect you guys to watch these videos, put your charts out, and start looking for these areas where we have drastic moves up, and then we sweep them, and then we start going down drastically. Or for moves that we have drastic moves down, we sweep them and we start going up drastically. You know, I want you guys to go into your charts, find at least 10 examples of these, you know, because these things are powerful. You know, you have another example right here. Look, right there, I just marked it out. I was going to mark it out one more time. You know, we have these highs right here. What did we do? We dropped. Okay, we have these highs right here. Hold on. What did we do? We swept it, we dropped. We have this high over here. Once we swept this liquidity, what did we do? We swept it, we dropped. I can find them all day, but can you find them all day? That's the thing, and that's what I want you guys to do. Although it might be boring, because who wants to go back in time and look for these things? It doesn't matter. That's the number one point that's going to make you successful. If you go back and you back test these things, if you go back and you gain the confidence, because I can find these things in the past all day, but it's about finding them in the live market at 9 a.m. before 9:30 hits, and you have to be acting off these levels. So this was liquidity sweeps for you guys. What is liquidity, why I use them, and why they're so important. Remember guys, in this thing we always want to be trading with the trend, because if we go against the trend, let's say swept this high, okay, now we're going to start going higher. We place our position right here with the stop loss over here. We want to go higher. What happened? We got obliterated, so that's why you need to have every single confluence, because you just can't press buy, or you can't just press sell once these areas are hit. The reason why this area worked, okay, we swept it, now we have this low, we broke past that low, there was an entry somewhere in here, or like you can see the entries right over here. That's why it happened. We had the sweep, break of structure, fair value gap, order block, whatever it was, and it worked. You can see we had a fair value gap. You guys might not know what these are, but we tapped into it, had the reaction, and then we probably had another entry. So these things work in every single time frame. I find my levels in the daily to the 1 hour, but I take trades off the 5 and the 1 minute. So they work in every single time frame, and if you line these up, I promise you'll be set. So this was day one. This is what liquidity is for you guys, what liquidity sweeps are, why I use them, and why they're so important. I hope you guys like it. If you have questions, please go ahead and drop them down in the comments. Like I said, I will not be annoyed, or I will not leave you guys alone. I will be there to answer every single question, and I promise you, if I don't have an answer, somebody in there will, or I promise you I can lead you the right way.